Hello, 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 Good, good evening, everyone. How are you doing? So this SwissCJ-Fx. Right, so this SwissCJ-Fx. Um, so I would like you to leave a comment down below and tell me where you're coming from. Yeah, tell me where you're coming from. So I would like you to leave a comment down below. Tell me where you're coming from. Okay. So you're welcome. This is SwissCJ-Fx. So I'm here to enlighten you and tell you more about directional bias. This directional bias is something that a lot of traders are having issues with. You know, Many of them find it difficult to understand the directional bias. But actually, what is directional bias? In my own little understanding, directional bias is in my little understanding, directional bias is understanding where the market is actually going, right? So, you know, for instance, the market has three ways that it moves. Either it's bullish, either it is bearish, or it is consolidating. So right now, understanding where the market is going is very, very important because that's what's going to determine if you make money or not. As always advised by our mentors and those that are ahead of us, that it is not advisable to trade a market that is consolidating. What do I mean by consolidating market? So for instance, um let me see. Okay, for instance, okay, um just the time, just okay, this is what I'm looking for. Okay, so a consolidation market looks like this, right? So, you know, so we are being advised that we should not trade a consolidating market, but I would it depends on the time frame you're actually looking at. For instance, though as I've said before, they will say that you should they say that you should trade the bullish or the bearish movement of the market, right? But again, for you to gain profit from there, it also depends on the time frame. So how do I mean it depends on the time frame? For instance, if we have this type of market movement, this quotation market movement at, let me just say, 1 minute to, imagine we have this like the 1 minute to, let me just say, five, let me say 15 minutes time frame. So you are going to find out that you know you're not going to make a lot of money, or you'll be stopped out easily, right? But when you have a consolidating market at, let me just say, from the 4 hours time frame to 4 hours time frame to let me just say monthly, then this consolidation movement is to your great advantage. And the reason being that, because it takes, for instance, now, you don't know how many months it took for market to move from this level up to this level. You don't know how many months market took from this level to this level. So when you know that at a higher time frame there's a consolidation, it's actually very easy for you to trade. right? So this is where directional bias come. You need to understand from the higher time frame, how is the market moving, right? And if you look at it, most market that we're saying that is buying from the higher time frame, when you go to the higher time frame, higher down, it's you're going to see that it's actually a consolidating market. For instance, you may say, gold is selling. No, no, let me not use gold. Let me use something like because gold is always bullish. Let's just say a market like GBP USD, right? So you discover that if you go to a higher time for maybe weekly, monthly, you will see that to some extent the market is consolidating. The market is consolidating, right? So for instance, let's imagine that this one is a monthly bias, right? This is a monthly bias like this, right? So okay, so this is the monthly bias. So so let's just imagine that at the monthly time frame, market from this level came and touched this place, right? So so looking at this, we are going to expect some what that price is actually going to reject from this region and begin to drop down. So though this is a consolidating market at a higher time frame, but when we go down to a lower time frame as low as let me say one let me say 1 hour to let me say 15 minutes, right? You're going to say the market is selling, right? You say the market is selling, but you will not just place a sell there yet. You wait for a confirmatory wait for confirmation from that level to make sure that there is a change of character. So what's the change of character? Change of character is market is the converting point where markets transcend from a bearish market to a bullish market, or a bullish market to a bearish market. So for instance, um, if market moves in this direction, this way like this, right? Moves like this. Okay, let me leave this place. Alright, so ah, let me leave this ah, okay. So a chakra is a scenario where a bearish market is converted to a bullish market, or a bullish market converted to a bearish market. So at this point, if a change of character is going to occur, for instance, it has been creating, a lower low, right? So one of the characteristics of a bearish market is that the market creates lower low, right? It always creates low. Then one of the characteristics of a bullish market, it creates higher high. When you have this in your mind, it's going to be very, very useful, because when you say higher high, higher low, it's kind of very, very confusing, right? But when you in your mind, try to make things as simple as possible. So a downtrend is a scenario where market creates lower low, lower low. Then a bullish market is a scenario where market creates higher highs and higher highs, right? So having that concept in your head is going to be very, very useful. So let's just imagine now this is a downtrend, right? So for a change of character to occur, you need to stop creating lower low and start creating higher highs. So from this point, price will now move from here and now come in. So when you see this happen, then you know that a change of character has occurred. So but before you enter trade, you don't enter from here like this. You need to wait for market to come down to this level, or most cases price may come down to this level, right? But you must wait for the price to come. So when you see price now finally, moving up again, then you can now start buying, right? You can now start buying because why? Because market is no longer creating market is no longer creating lower lows again. It has created the first higher high. So we're expecting market to keep moving up from this level. So it keep moving up like this, right? So it keeps moving up like this. Then okay, so this point here that market didn't create a lower low, but it first creates this is what they call a change of character. So in most cases, people call it market structure shift. Right? So that is called a change of character, or it is called the market structure shift. Okay, so that is what it's all about. So now concerning what we're actually discussing here right now, you know, at a higher time frame, in most cases, I mean like the weekly, the monthly, at currency pairs, now not commodity pairs. Most like gold is always bullish, but in most commodity pairs, the market at those higher time frame, monthly, yearly, in most cases they are always in a consolidating manner, in most cases. So once you understand this, then when the market touches this level, then from this point you don't just enter from here at a higher time frame, right? So you need to wait for a confirmatory ether, which is changing from a bullish market to a bearish market, right? So that one is actually another class, how to confirm that. But definitely when the market touch from this level, because there's so many confirmation from here, we're expecting market to actually drop down then this level. So understanding directional bias is very important in forex trading because no matter how good you are at your entry, right? If you get your directional bias wrong, you will all be stopped out from the market. In fact, it's better for you to get your directional bias right than to understand how to enter into the market. So this, when you understand directional bias, you have like fulfilled like 80% of your duties as a forex trader. You are already there, you're already on your way to being profitable. So all that is just left is for you to maybe how to enter another, which that shouldn't really be a problem for now. What many people are battling is directional bias. And so if you want to understand directional bias very, very easy, the best thing is zoom to a higher time frame, to the you can go to the monthly and try to find a consolidatory pattern at that higher time frame. When you see it, maybe for instance you've seen market touch twice at the point, then you now know. So this is one of the easiest way to trade and understand your directional bias. And again, there's one thing I always want to always say is that when you are trading, don't trade the pair because you see your friend trading the pair, right? Don't trade the pair because of you feel excited about how the pair or how the pair produce money like gold and silver. I always recommend you always trade a pair that is easy for you to trade, because at the end of the day, when you look at it closely, you know every pair and you can still get the amount of money. For instance, if I'm trading GBP USD and I'm trading gold, there's a way how we can stack my trade at GPUSD. I can still get the same result as anybody gets from gold, right? So that's what you must definitely understand. So do not trade the pay because your friend actually trading. Trade because of is easy and is easy and is nice, and it's something that you actually understand very very well. You know. So this is so I would like you to use this format wherever you are trading. Just look for that pair that at a higher time frame, maybe at weekly, monthly, is consolidating. So when you just look at it, just wait for a confirmatory entry, and from there you know you just flow with with the trend, right? So that is very very important. So let us see if we can even get some example here. So um let me see. Okay. Okay. Hello. Okay. That didn't. Yeah. Yes, I'm around. Okay. Okay. So are you seeing something like that? Okay. So for instance, let me clear this out. Okay. So at a weekly time, at the weekly time frame, you can see that there's a little bit of consolidation here. So all you need to do is just take your line and just, for instance, let's imagine that deal was it. So there's a little consolidation and market came here. So now market has returned back to this place. Then you wait for a confirmatory entry. So you can see that market shot up at this place. So this is a sign that market is actually bullish. But you will not just enter yet. You need to wait for um change of character, right? You need to wait for change of character. So from here, you're going to just and you now go to a lower time, let's say like 1 hour, and so you go down there. Mm, okay. Okay, so this is it right here. So you know so at that level that seems that market is consolidating for. So you just wait for, and what's the confirmation? Before, market was creating lower lows. If you look at it, so this is a lower low, lower low. So then this is a lower low. So this is a lower low. So this is, I would say this is the last lower low when it touched that point. Right? So this is the last one. So right now, you can see that market actually, what did it do? You know, this is the this is the lower low. So this is the last. So if you look at it, it didn't come down to break this lower low anymore. What you do, you waited. So you wait for it to break this place, right? So when market finally broke this level, because definitely any market that, any lower low that is being created is actually fall, it goes down, right? So when it finally broke this level that it actually broke from is the level that you wait for market to actually come back to. So you can see that after market broke this level, so for instance, there's actually it's a lower low, lower high, lower low, lower high, right? So anytime market breaks the last lower high, that is where you are going to put your point of interest inside, right? So that is where you put your point of interest. Anytime market breaks the last lower high at the last consolidatory level, right? That is the level of consolidation at the higher time frame. But when it finally got here, instead to break this, it now finally broke the lower high. So whenever market breaks, when market keeps breaking a lower low, that means the market is bullish. So a change of character is a situation or a scenario where market actually breaks the last lower high or the current lower high. So whenever you see market do that, they know that the market has actually changed. The market has actually shifted, right? So that's what it is. So again, a lower low, when the market creates lower low, it means that the market is bearish. When the market keeps creating higher highs, then you know that the market is actually bullish. So anytime if the market is going high, creating high, and eventually it breaks the current higher low, then you know that there's a change in character, and therefore wherever that last lower high is, that way you now draw your change of character. If you really want to be successful trade in forex trading, I always recommend that do not enter where the market has started moving. Enter the moment, enter at the point of change of character. Don't enter in the continuation, because anything can happen at the continuation. Because in most cases, it's always safer at the point of change of character. Any other one, you can actually be stopped out. So eventually, just imagine you held this trade for how many days? From this point, you held this trade, and just take a look at this. So that is what it's all about. Then again, you are seeing something like this. All you need to do is just come, add, right? So this is it. So what are we expecting? We're expecting price to actually come and come here, touch this level, and finally go down. But again, you must wait for price to form a change of character. You must wait for, I will say it again, a bullish market is where market creates higher highs, and a bearish market where market creates lower low. So whenever there's a change of character, it means that market actually broke the current higher low in the bullish market or a lower high in the bearish market. So that when a change of character actually happened. Right. So that what it's all about. So that was all about. So I would like us to um just say hi. Just say hi. Just say hi. Okay. So for now, I've come to the end of my live stream. So I want to say thank you for everyone that joined and I appreciate your effort. Thank you very much.